Ladies and gentlemen, Kei Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.9% there on the S&P. Nasdaq did see a bigger move today, 1.5%. Semiconductor up 3%. Dow 0.7%. Russell 2000 2% there. Russell 2000 has been correcting through time this entire year. So Russell 2000, the small caps, been pretty much a pause this year after a huge rally late last year. Transport up about 1%. Same with the banks. Energy did see huge bid there, about 4% positive. However, energy been seeing some decline, seeing some correction. I believe 10% or so recently. Biotech's up about 3% today. Healthcare's flat today. Home builders flat. Utilities down. Utilities been somewhat positive while the other indices were coming down as of late. So you can see the utilities down about 1.2%, retail 1%, emerging market 1.5%. Bitcoin up a little bit. Gold, silver, miners up today. They've been struggling in the last month or so. And so I think gold is holding up better compared to silver and GDX. And see if we can find any kind of traction there. Dollar is down about 0.6. Oil's up about 5.5. Treasury bond is flat. Obviously, VIX is down today with the market is being up. Let's stick with the spider. S&P 500 ETF, 65-minute chart here. So a lot of things we've talked about last week. A lot of things happened last week. This is all last week's price action right here, right? And some of the things we talked about is that the market fluctuation is a very normal occurrence in this market. Let's not let's get too ahead of ourselves. Let's get too emotional. Let's not get too intimate with the short-term fluctuations because that's been the story this entire year. But the entire battle, as far as the short-term movement is concerned, the battle was fought right here. You see this candle. I think this was a crucial candle there, right? Because you can see that we did have these lower highs here and lower lows, and you can see this what it looked like, potentially another lower high, because some of these both of my short-term moving averages were coming down, acting as resistance right here. We talked about that couple trading days ago, trading sessions ago, right? This is Monday, this is Friday, and this is Thursday, right? So we talked about that on Thursday night, what the bulls needed to do. So this on Friday morning, right, when we did see that first hour, push, and I talked about on Thursday night that because there was no video on the weekend, right? I might resume with the weekend videos, maybe September, October, we'll see. But we've been analyzing, I've been doing these videos Monday through Thursday, so we didn't have any video, but I talked about this is what buyers need to see, what the bulls need to see on Friday, a thrust to the upside and hold above it first 2 hours, right? And with that move, what happened was, you see both of my moving averages curling down here when things were looking bearish and bulls weren't able to find that traction. We did see that nice 3 hours of bullish move on Thursday morning, but all day long, at the second half of that Thursday trading session, what happened was it was stalling. And then we saw that what it looked like potentially some kind of a shooting star candle. So bulls couldn't afford any kind of downturn here, and so we saw a gap up, little slight gap up here, and then with that thrust to the upside, what happened was not only it was able to reclaim both of my short-term moving averages, but it was able to get above that resistance here. But we know that just thrusting above certain levels is not that's not going to confirm any move. We need to see it hold. So I think when we saw all day long, it was holding this gain. You see that first hour gain? Because in that process, what happened was both of my moving averages start to find and start to change and shift its trajectory to the upside, right? You can see it was moving sideways here and start to find some kind of trajectory to the upside. And keep in mind, and this was all happening when we gave benefit of the doubt to the buyers in the midterm, right? In the short term, in the micro term, the sentiment will shift very, very fast. So we were already in the midterm bullish sentiment with, bearish kind of a bias in the micro term on Thursday. Why? Because this is it cuts off right here. That's Thursday with the lower highs and lower lows. So given the data that is hand in the short term, we're saying, it looks bearish in the short term while we're still bullish. And I'm going to zoom out later and you'll see what I mean in the midterm. This is what we need to see from the buyers on Friday, and that's what we saw here, hung around all day, stayed above both of my short-term moving average. It kept moving further away from the resistance, and then once we saw a gap up this morning, and then it continued higher in the first hour and second hour, I think at that point, it's over, right? As far as this overall sentiment is concerned. But all that battle was fought right here. I want you to know that all that battle was fought that Thursday and Friday. This was a crucial level. You can check back my Thursday night's analysis, and there was a crucial level. And then I think that once that momentum was there, because we're in a midterm uptrend, things would have been much more different if we're a midterm downtrend. This is why you have to understand not only the short term, the micro term, but you have to understand midterm, the long term, and the primary, so you understand the overall tide, the overall sentiment. Again, the short term fluctuation, the micro term, right? You do not want to get too intimate with this fluctuation. How many times this entire year, how many people calling for the market top, not to mention late last year, nobody ever believed the market will be here today, but we're here, printed 448 just about a year ago. Spider was at 220, right? How many people out there calling for the market top, not understanding, not respecting this overall trend? So currently, we did print new all-time highs right here, right? And looks like once retest in a retesting phase on the last hour, the prior new all-time high level, that was that peak here before that short-term downturn there, right? So 446.98 is going to be that micro-term support. If we do lose at 445, there's a gap area in that vicinity. It's going to be a stronger support, right? So let me zoom out here and I'll tell you what I mean by midterm. So despite the fact that we did see these down, and I talked about this on Thursday, that it's not the first time we've seen these type of fluctuations. Why do you want to every time calling for the market top? We also talked about the impressive resume guy. Keep in mind, we didn't even get there. We didn't even get to retest the impressive resume guy, which is my midterm moving average. You can see we stopped short, stopped prematurely. We weren't even able to get there. Why? You can see this gap area acting as strong support. Bears just tried to break below it, failed here, right? It failed to break that, or fill that up gap. Tried it one more time here, it failed to fill that up gap. And then, about a month later, a couple weeks later, Bears tried it one more time and failed to fill that gap this time again. And quickly we saw that V-shaped reversal. We're back to new all-time highs. And this is why when we see that midterm trend is bullish, this kind of price action can happen. And this market has been faking out and leaving so many people behind, right? So many people are saying, you know what, it can't possibly go any higher. I'm gonna wait until we see meaningful correction. Well, guess what? We did not see any correction this entire year. For it to be considered a correction, labeled as a correction, we need to see minimum 8%. But in this market, we need to see 10% or more to call it, to label it, to classify it as a correction. Well, we didn't see that this entire year. We've seen it on the NASDAQ, we've seen it on the small cap, we've seen it on the transport and the banks and energy, but I'm talking about the S&P 500. I don't believe we saw it on Dow either. I think semiconductor, we might have seen it close to 8%, but not on the S&P. So keep that in mind. So on the S&P, we haven't seen a real correction this entire year. But this market, seen this lethargy, will make a little bit of move, and then will come right back down and fakes everybody out, and it goes right back in, right back up and make printing new all-time highs. Keep in mind, this market is up close to 20% year to date, though it feels like the market hasn't gone anywhere. This market, this year, truly is for the long-term investors and position traders. Anybody else trying to, time things in the short term, getting too intimate in the micro term, trying to time the lows and highs, been getting burned, been extremely difficult market. Let's check out that oscillator and see if we can extract any more information. So that oscillator is pushing it all the way up. And this is exactly what bulls wanted to see. You can see here premature crosses, right? You see these premature crosses. What we want to see is this market pushing it all the way up, and it looks like it's doing that. So we're getting into that overbought level. That does not always mean just because it hits overbought doesn't mean it has to, see a correction. Market can correct through time before making another run up, right? So you can see right here, it hit overbought right here, right? You can see that it actually made a move to the upside for another day or so. So I won't be surprised to see maybe another gap up or a continuation to the upside, or even if we see any kind of decline, you may see oscillator moving sideways for days or so and correcting through time, right? Seeing some kind of a, up and down before making a move. What the bears need to see, obviously need to fill this gap, needs to get below these short-term, both of my short-term moving average. But last time we reclaimed it right here, this was the last time when the price reclaimed both of my short-term moving averages. Well, this was what? July 20th. It was not able to break below it until August 18th. So about this is entire month right here. So entire month from July to August, we did see that rally. I mean, it was lethargic, but you can see we were able, the price kept riding that, both of those moving averages for entire month. So we cannot kind of, you know what I'm saying? Unless there's some kind of big shenanigan, we can kind of expect that we may see another month of lethargic, grinding, marching, ever so slightly marching higher type of market. Maybe, until end of the August and possibly first part of September. But I'll come back for you tomorrow. We'll kind of reassess the situation. 446, 445 level is to watch. And we'll see how this market behaving. We are at overbought sentiment per my oscillator, but that does not mean it can keep pushing higher, because it can keep pushing higher and we can correct through time. I want to give benefit of the doubt to the buyers in all terms, micro term, short term, and the midterm. As long as we above both of my short term moving average, as long as this gap stays open, we want to give benefit of the doubt to the buyers. Enjoy this evening and good luck trading tomorrow.